Hey, where's everybody? There's everybody. What's happening, guys? Welcome to Trader Talk Live. You are here with the entire Cryptosomniac staff, and we have got our special guest, John from Decrypto, down here in the corner, over here. And we are going to talk about trading indicators today. John, I know you're a Forex guy. Amal's a Forex guy. Snae's had some Forex history, so wanted to kind of compare some of the what it's like to trade between them. You use the same indicators, same skill set, etc. And then I've got a couple other things just specifically about what kind of exchanges do you like to trade on, etc., etc. So you know, we don't stick too hard to a formula here. We like to just have a conversation. So you want to give a little background on yourself real quick before we get into it?
Sure. Well, I've been trading on my own now profitably for about 8 years. On Quora.com, I'm one of their most viewed writers, and one of the things that a lot of people have read the most is a question that I got asked about trading, and I said that I discourage people from going into it, that it is like the worst idea ever to try and go into it as a career, and that when I finally became profitable, I was not really happy. I was just okay that I survived the process, but I worked in the mental health field for 12 years prior, and always enjoyed the markets and spent a long time getting into them and learning about it and becoming profitable. And yeah, I think that's about it.
Right on. So how long have you been in the crypto markets? Because I know you're also a Forex guy. So how long has your exposure been in the crypto market?
6 years I've been involved in the crypto market.
Nice.
Yeah,
Plenty of time.
Did some mining with my brother back in the day and sold our Bitcoin when it was $200. So that was really unfortunate, but it's hindsight.
Yes, indeed.
Mm-hmm. I do the futures market as well, but that's just on the open though.
Okay, sweet. James is also a futures margin guy, so we should have all kinds of good stuff to talk about. All right, so let's see. We got a bunch of people in the chat tonight. What's up, Jay-Z Drift? What's happening, Boise? What's up, John Cornish? Igor over there hanging out. What's happening? Dolphin, Life Size Box, Muhammad. James dropped a rap for our intro. I missed the rap song? Man, that's sad. Steve Outseki wants to know, do you ever use dominance charts instead of fiat or crypto pairings?
Dominance charts, I guess I'm wondering what you mean by that.
That's me too. I don't know what he means either. Dominance charts, I think he's just talking about specifically Bitcoin dominance versus other coins. Is that...
Oh, not really. I mean, Bitcoin's so heavily weighted in cryptos, I don't see a point in using it as a pair. Otherwise, US dollar pairs, I just don't see a point in using anything else unless you're doing some arbitrage, but it's not that liquid of a market yet to do it. Well, I guess it is, but it's up to you.
Yeah, the Coin 360 website is good for seeing Bitcoin dominance. And when the dominance goes down, you know more money's going into alts generally, so you can see a transition on the cycles, like alt season or that kind of thing. So yeah, I do look at that kind of resource.
But that being said, I don't think I honestly don't think that if we're in a Bitcoin bear market, no one's putting money into alts. I think everything is pegged to Bitcoin, and I don't think dominance charts have a big say in the overall market health. You know, I just think that people hedge their bets on Bitcoin over altcoins, and that's about it.
That's what I would say. I mean, the dominance really just tells me, did money flow in or out of Bitcoin, like into alts or out of alts, back into Bitcoin. Generally, that's generally the only use I've had for looking at the Bitcoin.
Well, the only reason I think is because mostly all crypto to fiat pairs are Bitcoin to fiat. I mean, I don't think anything even comes close. I mean, we have Ethereum that gets kind of close. I mean, not even remotely close. Maybe like 15% of the volume of Bitcoin. And then in Japan, you have Monocoin. And I think those are the only two big ones that really have a big fiat pairing.
Yeah, agreed.
Bitcoin's like the ETF for the SPY of cryptos. It's and the rest of the market's so heavily correlated against it. It's and like he was saying about we have a noticeable bull market when we see like 75% of the altcoins catching a bid and rising, and then Bitcoin is like staying at a good like 3 to 4% while everything else is screaming at 20. And it'd be great to get back into that scenario we were in last year from September to December, where we had a growing Bitcoin market, but we also had the transition of capital from Bitcoin into altcoins and back and forth. It was a really nice time to be trading that market.
Yeah, it was.
Totally.
I think everybody thought they were hot shit traders last year, to be honest. Like it was,
Yeah.
like all kinds of people thought they were great traders, and then as this year has come in, it's realized that maybe it's not as easy as everybody thought. But I guess that's part of the fun of actually learning how a financial market moves. Is what do you mean?
Well,
it's not
it's
green
like
candles forever.
Yeah, it's like the 90-90-90 rule of trading, right? Like 90% of traders lose 90% of their money in 90 days. Like there's something like that, and it's ridiculous, but it's very true. And I don't think it changes from market to market. I would actually say, and maybe John could test this, but I think retailer traders actually get killed way more in Forex markets than they do in the stock market, because you're so inclined to use heavy leverage. On average, in the Forex markets, you can't really make money unless you're using 50 to 100 x leverage. There's some exchanges that definitely, I think there's like AAAX, that one offers 2,000 to 1 leverage.
Imagine
right?
Yeah,
it's
that's
easy to get liquidated
just-
at that point, huh?
That's predatory margin. That's predatory lending, and it's really inappropriate. And the Europeans finally tackled that. They passed they enforced the new regulations, I think, back in June. So, a lot of the traders and retail traders in Europe who are used to having like 300% leverage are limited to I think 30 now is the max for the major pairs. Maybe I'm not quite sure off the top of my head, but yeah, retail traders do lose money all the time, and that's what brokers like retail traders for. It's just for liquidity. That's all.
Liquidity.
That's it.
Yeah, it's Jay-Z Drew says
Yep.
2000x leverage, liquidate after 1 cent loss. That's what I'm saying. I mean, with that kind of leverage, if it moves a hair, you're gone.
And I mean, like, there's nothing really. If you know how to, if you've been in finance or trading, for any length of time and you're profitable, the amount of leverage isn't going to matter to you. But for other people, it's gambling. It is straight up gambling. And people who are going in for $500 to open a Forex account, they're not in there for any fiduciary responsibilities to their. It's wrong. it's just flat out wrong.
Agreed. Yeah. No, Forex is a whole different, animal, and I feel like if you're a Forex trader, you're probably going to be, a one-dimensional trader, meaning that you can't really be, a great Forex trader and then also a great, equities trader. You might want to just. People usually stick to one or the other, or it's like same thing with crypto. All these people who are now starting to go into Forex or starting to jump into the stock market. I mean, they have no idea, how these are completely different markets. They operate, under different measures and psychology and different pressures too, in terms of, other economical externalities. So it's like learning the entire crypto market over again, except the stock market and the Forex market have been alive for like decades.
Right. It's a lot more data to study and. Well, then, do you think? I mean, because again, I'm pretty under the impression that trading is still the same skill set. Reading a chart is still reading a chart. The indicators are going to be the same, correct? I mean, I don't trade Forex, so I'm maybe speaking out of school here. But it's effectively it's the same skill set across markets. It's just, is it do you set your indicators differently? Do you set your, because Forex is a 24-hour market as well, right?
Yeah,
25/6 though.
Yeah, it's closed on Sundays, but otherwise it.
Yes.
Okay.
Yeah.
Yeah.
I mean, it's the most liquid market on the planet. I mean, over $1 trillion is traded every day. It is the most active market on the planet.
Yeah.
It's it's fun. I really like it. And but I mean, Forex markets, futures, they trade a lot. A lot of futures contracts will trade a lot, just like Forex. But the stock market's for chumps. I don't know. I mean, there's no point in. I mean, it's kind of like trying to trade altcoins against the dollar when everything's highly correlated with Bitcoin. ETFs are like the dominant mover in stocks. So you better be trading the spiders or the indexes, because trying to swing trade individual stocks, unless they're Amazon or Apple, is just really impossible. I mean, stocks aren't great for trading anyways. I mean,
It's not
I know
as
there are people who
volatile of a
trade.
market, so you don't have
No.
nearly the opportunity. I find the stock market boring personally. I don't have the patience for it. It takes too long for anything to happen.
And you have
Why don't you tell that to? Why don't you tell that to the weed traders? I mean, all the weed stocks.
Yeah, those guys have been making money hand over fist lately.
Yeah, I mean, I guess to add to like to play devil's advocate, and just to add a caveat, I would actually say that there is definitely volatility in the market. So here's the interesting thing about the stock market, right? When it comes to institutional traders, they actually move money from. You can see money actually flowing from sector to sector, and you can see positions being defended from one stock to another when you realize that, okay, here's where institutions are defending their positions at the 20-day moving average or 50 moving average, whatever. And you can see that every time it comes down closer to that moving average, they'll defend it, boom, ramp up their buys, and then push it back up. Mark up, take their profits, draw down, same thing over and over. But again, like, you need to know where, you need to see exactly where the money is flowing. And one thing I mentioned in our channel is, I like to look at the VFMO. It's a momentum indicator, not an indicator, rather it's it's basically a ticker where you can figure out where exactly the smart money is going into and which sector is going into, because it's got the heavyweights like AT&T and Apple and IBM, all the big weights, the blue chip stocks. So exactly, okay, if the money is coming out of the market, VFMO will be the first one to start, showing signs of weakness.
Mm-hmm.
Yeah. So, well, I guess my question to John is, what exactly? So, when it comes to Forex, I personally look at strong pairs like the U.S. dollar, euro pairing, or Great Britain pound and the U.S. dollar. What do you typically look at to show signs of weakness in larger economies?
Well, for Forex trading, I pretty much focus on the euro dollar, the cable, which is the pound dollar, the Aussie dollar, the New Zealand dollar, the pound yen, dollar yen.
Yeah.
I mean, really, any of the yen pairs. It's the Aussie yen's a lot of fun to trade. The pound Aussies, a lot of. I don't know if it's just me, but the pound Aussie follows levels of support and resistance so much better than anything else. It's weird, and then the euro pound is a lot of fun to trade. I don't touch it right now, actually, because any little whiff or whisper of something Brexity, it just goes all over the place. And but Forex, there's so many fun things to trade, and there's a lot of different time frames to trade them in. So
that's a really good point, John. And one thing I was going to mention is, for those who are actually thinking of going from crypto to Forex, something to pay attention to is what you just mentioned. Brexit, right? Like, I think the German Chancellor Angela Merkel, she, I think, is not running for her 5th term now. Right, so you can actually see that reflecting in the euro and U.S. dollar pairing too. Mm-hmm. And that was something that literally happened in the last 24 hours, and you can already see signs of weakness. At least intraday weakness. And so for those who are actually thinking of getting into Forex, these are the things that you have to look for. If you're trading a pair, how is their economy looking? Elections coming up. What are their imports and exports? How is even the fucking weather, dude. It's crazy stuff.
Yeah, Forex is green screen. Don't have the filter in Skype.
All good. Yeah, no worries, man. I was defending the green screen. I was like, I have that same green screen on my chair right now.
And shout out to Forex Lens, who contributed. I don't know what CA is. You guys, Forex guys, may know the CA.
That's Canadian
It's
dollars.
Canadian dollars, right? Yeah.
Canadian dollars.
He just donated 420, which may be like here.
That
So
was in honor
shout
of
out to
all those
Forex
Canadian
Lens
weed
for
stocks?
donating 420. Yeah. I mean, it's legal there, so donate as much 20 as you want, all you Canadians.
Nice.
So
Nice.
we've got a question here from Steven Austecki saying, which crypto sectors have the most potential over the next year? AI, finance, platforms, over-the-counter trading, etc. Any feelings on that, guys? I'm personally saying, like, honestly, I just think it's whatever DApp starts to work. There are enough platforms on the market. I mean, if it's going to be any platforms, EOS might have some room to run. GoChain might have some room to run. Obviously, Ethereum. But, you know, I think there's already enough platforms. I don't think we need more roads to drive to the places where we're trying to get. I think we need some cars getting built, is my analogy there.
Yeah.
What do you guys think about that?
Well,
Security tokens, dude.
Sorry, yeah.
Security tokens, yeah.
Yeah, exactly. And was that did that question mention STOs?
It did not.
I mean,
specifically, I do think that's relevant.
No, sorry, OTC was it?
Yeah, he did say over the counter, yeah.
Your OTC is the biggest market, but it's not going to be a platform. As soon as it becomes a platform and it's not dark, like dark pooling, then it's an exchange, pretty much. So OTC is off exchange, and it can't really be a platform unless it's a dark pooling platform and the orders are hidden and they're matched by an intermediary. So that'll always be the biggest market, but it won't be a platform per se. And we're going to have the rise of the STOs, the security tokens, and there's have the Gibraltar Exchange and a few other exchanges coming out that have jurisdictional freedom. We've got to wait till the SEC puts down some regulations, and then it's going to be wide open. There's people waiting in the midst, waiting for the SEC and seeing what they're going to say.
How long do you think before we actually see liquidity, right? Because I can have all the security tokens in the world, and if I can't sell them, if there's no liquidity for them, what's the point? So I do agree that the security tokens are the thing, but so I guess really what I'm asking is, how long do you think before we see the regulation where they, you know, where they finally can start launching these security token exchanges that we're actually able to trade security tokens?
Well, there's a couple in Australia that have they're fully regulated. They're going to have the STO themselves are going to have their own internal exchange, so you'll have some liquidity there, and then you'll have GBX and a few others that in jurisdictional freedom locations around the world that will have liquidity there, but it's still early days.
Yep. Yeah, regulations.
That being
are,
said,
go ahead.
Yeah, so that being said, sorry, yeah, I think my Skype is lagging behind everybody else's. My bad if I cut you guys off, but that being said, we have Ripple, which has a huge trading volume, and not as much as Bitcoin or Ethereum, but still there's no fiat pairing for them, or very limited fiat pairings, because of the fear of it being security, right? Right now, the SEC only classified 2 cryptocurrencies as commodities, which is Bitcoin and Ethereum. And once we start getting a more stable, a more stable set of rules or regulations, that's when I hope to see maybe more utilities and more securities actually being integrated into what people use today, which is the dollar.
Yeah.
What really needs to happen is for the cryptocurrency sphere, and I mean it's a legit brand new asset class. I mean, I think people forget that we're living in a really awesome time, because when was the last time there was a brand new asset class to trade that was considered property or a commodity? I don't know. It's been a long time. So, those of us who have been in cryptocurrencies and trading them and looking at them for the last 6 years or 10 years or 8 years, it is very easy for us to get very kind of upset at what the market is doing right now. But there is so much money professionally and institutionally that is sitting on the sidelines. I know we hear this all the time, but they can't get in for fiduciary reasons. They would love to, but we need some type of self-regulating authority like the National Futures Association is for Forex. There's all sorts of examples of like that where you have an organization that is self-governing, self-regulating, that a government is okay with kind of making the rules for. I call it like the NFL. Like there's referees in the NFL, but they don't create the rules. The owners of the teams or the participants, they come up with ideas, and it's the ref's job to enforce those rules. That's the kind of thing that we need in cryptocurrencies, because we can't just have the Wild West. Unfortunately, I'm a free market dude. All right, Milton Friedman, free market all the way, but it's really impossible and naive to think that you can have an industry that is not going to. You need to have some way to go after bad actors and punish them.
Agreed.
And to enforce it.
So how does that play into things like distributed exchanges and this is the thing that I like. So I like the idealism of I like a little bit of the techno anarchy thing that it brings, like let's break the yoke of control, right? So however that's my idealism or not. But I also am I come out of corporate business, right? So I also understand that like the world works on rules and regulations. So I've been having trouble trying to square these two things recently, right? Because I want the regulation to come in so that the institutional money comes in so that we can have this as a serious market, like a serious actual financial market. But then also part of me is like, I don't want it to just become Wall Street 2.0. So I mean, where do you think where is the nice bridge between that chasm of distributed systems and decentralization versus I mean that's the exact opposite of KYC, AML, securities, et cetera, et cetera. So how do we bridge these two worlds?
Yes. I don't know yet, but I think we're already working on it. Go ahead, James.
I was just going to say, we're going to lose a lot of decentralization, but we'll have transparency with the blockchain. That's what it's going to be about, transparency and efficiency, not so much decentralization. That's just where we're heading, and there's just too many bad actors, and I'm kind of torn both ways, but there'll be Monero and certain coins to circumvent maybe dictatorships and other things that I think we'll get best of both worlds to an extent.
I mean, we had that discussion earlier about, hey, there's the future is dApps. Like when all these protocols, all these platforms like EOS and Qtum, things like that, we have dApps. But if we look at just the top used dApps, they're all exchanges and/or CryptoKitty. That the IDEX, Fort Delta, Bancor, all these are dApps that are built on Ethereum, that they're only being used for exchanging things, right? So right now, the app economy is very, very limited. So as security tokens start to come online, and I think almost everybody exclusively is building a security token on Ethereum. So some sort of, I think it's Ethereum 421 or something. I don't know what Ethereum, what protocol they're using now or what EIP they're using now, but that or Stellar. They're either using Stellar or Ethereum. So I'd like to see how the future actually plays out. With everyone says, hey, security tokens. I think every conference that you go to now, everyone highlights security tokens and their impending entrance. Yeah, their impending entrance into the market. So I'd just be curious to see how many companies actually embrace this, because right now in the crypto market, it's just user A trading to user B and then user trade back. That's pretty much what it's going on right now. There's not really new money really entering the market, and I'd like to see how that actually all plays out.
Yeah, new money coming into the market, I think is. I mean, it's very clearly just been, push. It's a little kid pushing his food around the plate because he doesn't want to finish his peas or whatever. I mean, like it's just moving here and moving there. Our market cap has been stagnant to negative for, I mean, basically this entire year. I mean, as we all know the bear market wears on. Boise wants to know. He says, "Call me old-fashioned or traditional, a gentleman, but When moon? He wants to know.
Yeah, what the hell is going on? Like, are we hitting 5,500, or are we why are we moving sideways? When are we actually going to break out of 7,000 without a tether pump? What is the actual natural market progression going on? Because every time you go into TradingView, you just see shills. It'll be 200,000 by December. And it's just I can't even open my eyes without seeing some sort of shill happening, whether in TradingView or all these Twitter experts. It's just
every single
mind-boggling to
to
see
this.
this.
It's like squiggle, and then it just like all of them just like point a line up. It's going. I know. It's like you can't. Listen, we all want Bitcoin to moon, but that's not
and
what
especially
the chart's
just like
telling you. Then that's not what you should be telling the people.
And especially like 2017, whether you're on Twitter or Instagram, all of a sudden in 2017 you start seeing these three things: hashtag entrepreneur, hashtag investor, hashtag trade. All in 2017. All these people are now just expert investors and traders and investors that they were just essentially just given a gift from God. Yeah. It's crazy. It's just crazy to see. So I'd like to hear all of you guys' opinions. What do you predict? Like, what's going to happen? When are we going to break 7,000? Are we going to break 5,000? What's happening?
There has been I know people keep calling it a bear market, but if we go back to Dow Theory 1.0 from your baby's first book on technical analysis, and we go through the basic it's kind of the chicken or the egg thing. Consolidation is prior to an expansive move, and it also comes after a distributive move. So one of the characteristics of a consolidative market is really what we're in right now. And the bear market ended technically on that second low in.
You can screen share and pull up a chart if you want.
June.
Okay, I'll just do that.
In May or June.
Share screen. Okay, I'll use.
There you go.
So if we go to, so these wavy lines, this is when we were talking about the astro stuff. This is the planet. This is the longitudinal position of Jupiter, and then its harmonics, and it creates natural support and resistance levels. I don't know why, but it's there and it works in every market. The planet does. But if we go back to the first major low that was hit in February, did we make a new low for the year? Yeah, but structurally, no. The official end of this bear market, you could say, was either in February or in April. Bear markets are fast, they're rapid, they're violent, and then what happens afterwards is not people just don't get in and buy again. What you want to see is people flake out of the market. You want to see the end of a bear market is not lower highs. It is the end of lower lows, and we have not had a new structural low since February. Is there a chance that we could break down lower? Sure, but we've gone the entire year holding a supportive structure around that February low, and without any real desire on bears to push it lower. We're just getting a consolidation of price, and that is because people are leaving or they're just sitting tight. And that is one of the fundamental characteristics of a market that is about to enter into a new expansion phase.
And as you said earlier, this is a brand new asset class, and one thing that this asset class has similar to the energy commodities asset class is where, for example, mining a Bitcoin is around $3,500 to $3,800, right? Mm-hmm. So it's almost gets incentivized for miners to not dump their Bitcoin right now. Because it's getting dangerously close to the actual mining profitability of Bitcoin. So, what do you think about that? I mean, do we think that it's going to go lower, or do you think this support's going to hold, or what do you think?
There's been, depending on the chart data you use and the exchange for the data you use, if you look at the volume profile, if I pull it up here, this is on Coinbase. Let me pull up the daily and just kind of zoom out here. if you can see it, this zone right here, so this is going back to April of 2017, but if we go back further a number of years, you're going to see the largest number of accumulation was down below $1,000. But for right now, let me just get rid of the geometry. This red line is that's called the volume point of control. That means that is the most amount of Bitcoin that has been traded at a particular price level. And so this level right here is where we've had the most accumulation on the chart, with the exception down here. And so this is the strong support zone. This is where people are buying and hanging on. This is where accumulation has been done. And so it's very natural for prices to want to oscillate above and below this level. But this is a very strict, the guy who owns Market Analyst, he did a blog post back in October. He called Bitcoin the perfect technical market because it follows technicals so precisely, and there's no reason to suggest that it wouldn't anymore. But yeah, this is a very strong support zone. It should continue to hold like that.
So are you suggesting it continues to hold throughout Q4, or are we going to see a lower level of support, or you think we're going to break through a resistance, like a psychological resistance level?
If we see a breakdown lower, I would not expect it to last very long. I'd expect it to be a pretty violent drop where it'd be like a flash drop, like we saw back in was that early January?
Yeah.
In December right here. I would expect it to operate like that. This is one of the reasons why I do not use stops in this market. It's very, you just shouldn't use stops in this market. You'll get robbed. But yeah, if there is any move like that's the other thing you see. If you ever use Bollinger Bands and you're expecting something to move up, you often see a false breakdown lower and then it drives up higher. That is actually something we should want to see as a initial push lower to test a lower number, and higher. Yeah. That's the kind of thing we should see.
Yeah, I think we need that as a catalyst or a price action catalyst. It just gets to that low point where it's the right catalyst to go up. And I've been looking at the exact same chart, and my lowest point, worst case scenario, is about 4,300 at that next high volume node down there.
I agree. Yep, totally. That would be the natural place. I mean, and yeah, what he just said is, it would really that complements kind of what I was saying, is that any drop lower would be fast, because when you look at a volume profile, you look for things that are called high volume nodes and low volume nodes, or I call them volume deserts. So areas where you have these deep peaks or these high peaks over here are where you find a lot of support and resistance. But then it's like a vacuum. So when price drops or goes above, when it gets to these areas where there's no price that has been traded, it gets sucked in like a vacuum, and it's very fast, it's very rapid. You won't have a lot of time to react to it. So if you're a bottom buyer, like I like to be, you probably should have buys sitting around that 4,800 to 4,400 area, in anticipation of that. Otherwise, just hold, because honestly, you could take a month off when this were to drop and come back and see it trading near 12K. The move lower would not last very long. There's my 2 cents.
Wow. Okay.
Yeah, I agree completely.
Wow. So how about this, guys? Can you stop sharing your screen so we can get back to the yeah. All right. So do you think that specifically the Bitcoin markets are going to follow the stock market, or do you think it'll diverge eventually?
Well, there's no correlation between the crypto markets and the stock market. There was actually a pretty good analysis done. I forget what article it was, but it was Bloomberg. This is something that I've mentioned too. Is I've been hunting down trying to find correlation, but there's very little. But not being correlated also doesn't mean you're negatively correlated, right? So it doesn't mean that when the stock market is going up, cryptos are going down, or when cryptos are going up, stock market is going down. It's really not how it works. And we haven't come to a point of legitimacy in crypto where big money has, found a hedge, as a hedge for crypto, or the stock market, to use vice versa, right? So like, one thing is people talk about, when you see weakness in the US dollar, right? People actually start going into gold. You can actually see this dating back, 10, 20 years. We haven't seen anything like that because also Bitcoin hasn't even been around more than 10 years, right? So it hasn't even gained that kind of legitimacy yet. Maybe talk about this conversation 10 years from now, it could be a completely different conversation.
Yeah, I think we'll have an inverse correlation in the future.
Definitely.
Yeah, quite possibly. Yeah. I mean, for now, I think, the US dollar is, it's still king. 62% of the foreign money is actually held in US dollars. It's kingpin out there.
Yep.
Yeah. But yeah, I think Jason, I think one of the questions you had was, what do you see between the US dollar or other fiat currencies versus Bitcoin's strength? And I guess my answer to that is I don't think that we have come to a point where Bitcoin has come to a deciding factor where we see Bitcoin as a somewhat of a you can't replace the US dollar for Bitcoin just yet, right? It's just not usable.
Oh yeah, no, that's a long ways off yet. I mean, we don't have, and most people don't even still know what Bitcoin is. So obviously that's a huge ways off. But I was just saying, like, do we think, do we see altcoins? I wanted to know, do we see altcoins decoupling from Bitcoin anytime soon? Because
no.
I don't think so either. I mean, there's no other on ramps until we get other on ramps. I think it's just going to continue. Like, basically, Bitcoin is the only on ramp to get from fiat into, for all intents and purposes, it's the only way to get from fiat into the crypto market. So I think, in the near term, that's going to be what we're dealing with until there are more on ramps for other currencies.
Yeah. I totally agree. Yeah, I mean, we have a long way to go, I guess. In terms of getting the legitimacy of altcoins being as good assets to invest in, especially for like the average retail investor, right? Because for most people, like, crypto is nothing more than gambling, and that's probably why the SEC frowns upon it so heavily.
Yeah.
I think that the ETF will. I mean, I agree with everything you read about that ETF. The ETF's getting passed in Q1 of 2019, but there are, like him or hate him, Trump has 4 appointees on the SEC who are anti-regulation, pro new stuff, and 4 out of the 5 of the commissioners are his appointees. And there's they're going to pass it. It'd be weird if it didn't.
Yeah,
and that's just going based on a political idealist standpoint. The 4 out of the 5 there are Trump appointees, and 2 of which are very obvious bulls, or I wouldn't say bulls, but they're allies of the technology and the new asset class. They don't want to be the gatekeepers.
Yeah, they're like more so like libertarians.
Yeah, yep. So that's definitely going to happen, and just the fact that Commissioner Hester Pierce, was that her name?
Yep, Hester Pierce. Yep.
That she wanted to do a review of it. That has to be agreed upon by other commissioners. She can't. I don't believe she can unilaterally do it. So that means that there were others who agreed with her dissent and are looking at it, and they've spent a lot of time taking public opinion. Which, if you read the public opinion posts on the SEC, they range from lols, pass it, to very thought out 2-page posts. But this is definitely going to happen. This is the last thing that needs to happen before you have a legitimized asset class. You already have a futures market. The 2 largest derivatives markets in the world, the CME and CBOE, have futures contracts on Bitcoin. It's just a matter of time before the New York Stock Exchange and whoever else gets an ETF listed.
Yeah.
I know there's been a lot of rumors about it.
Mm-hmm.
Yeah.
New York Stock
And
Exchange,
so,
particularly.
spitting whiskey all over the place. And so if you're wondering if it's going to drop to 5,000, 5,800, 4,800, or 3,000, you're probably going to be kicking yourself in the butt a long time later if you waited. Because the difference between where the high price of Bitcoin, this market is not even nascent yet. It's 10 years old. It hasn't even been tapped yet. It doesn't seem like that if you've been involved in it for a few years, but we haven't seen anything yet. This is the greatest wealth generating opportunity that any of us will ever see, probably. And I think it's just foolish to wait for a $2,000 difference when it's estimated that this thing could be over $10 trillion within a 9-year period.
That's the estimation for full market cap, or that's the estimation for the asset value itself?
That's the estimated asset. That's the estimated market value in 9 years is towards 10 trillion. But there's other. I don't know how they valued it at 20 trillion, but 10 trillion seems. And I'm not an economist. 10 trillion seems pretty conservative, still. But I mean, it could be that way because we're not talking about like just cryptocurrencies like we see them right now. We're talking about the transition of financial markets into tokenization, into platforms, into everything. Because that's just like modern stock markets, like we know. When we were talking about trading stocks and stuff, you have to pay for a lot of the privilege to participate in that market. If you don't, you want level 2 data. You want to trade before the market open or after the market open. And there's a lot of cost involved per trade. Blockchain eliminates almost all of that, and I mean this is, and Bitcoin is the thing that probably should. I'm not giving out financial advice.
Right,
but
none of us are financial advisors. This is not advice.
Derivative trading involves substantial risk, is not suitable for all advisors. Past performance is not indicative of future results. If you have any advice, cost your financial plan.
Don't worry, I ran the disclaimer at the beginning. Don't worry.
So, Bitcoin should, from an investment standpoint, for me, complement a large portion of my crypto portfolio because it is the medium that is used and will be looked at for the foreseeable future.
Yeah. So I actually wanted to just highlight this really quick is the top 100 exchanges by trade volume and their 24-hour change as of today. I mean, so we're obviously seeing a lot more people entering the markets. And let me just share my screen real quick. All right, hopefully that works out.
There we go. Yep.
So, I mean, I think it's kind of crazy to see this much volume, being pumped back into the market as we're seeing. I think on Coinbase, I believe we hit 6250. Is that correct? I believe that's correct. But
I think you're right there.
It's just,
yep.
Yeah.
It's just crazy to me to see so much more volume coming in throughout 2017. Even though obviously we saw the most volume in 2017, but we saw the most volume in 2017. But 2018 has been pretty voluminous, per this bear market. I thought a lot of people would be exiting, their positions, but it really hasn't been. It's just been the rise of futures and the rise of futures and the rise of margin traders. Really, that's what I really feel like what's happening right now.
Yeah, that BitMEX volume is all shorts coming in.
Yeah. BitMEX and Bitfinex, I have a real issue with them because they're two people who did not want regulation because they are straight up naked shorting. They are straight up naked shorting. There is a fixed Bitcoin is a fixed volume, just like any stock that's traded on the New York Stock Exchange. There is a set amount of supply. There's a certain amount of float that is available. That is the same with Bitcoin. We don't really know exactly what it is, but it is not what is being traded and shorted on Bitfinex and BitMEX and these other exchanges. They are straight up allowing naked shorting, which is really bad, but also kind of awesome in a way because that kind of false volume being done with the shorts is going to cause a ridiculous amount of covering in the market. It's going to be nuts.
Yeah, I agree. Yeah, well, shorts. I mean, at some point, shorts are definitely going to get squeezed, and man, that money is just going to start pouring into back into Bitcoin. I guess the only question is when.
Yeah. Yeah, I hope we find a bottom before the ETFs come in, so we can use that as a catalyst.
Yes.
Now, if we keep trending sideways and the ETF comes in, we'll push up, but probably artificially, and then we'll be still looking for a bottom. So hopefully we have some catalysts.
Yeah.
If I can show my screen, I want to kind of go over just the real quick, like the cycles that we've seen over the past
click that
10 years.
Screen share again. It should be down in the bottom right of your screen. There you go.
Got it. So this is on this software's market analyst. So this highlighted box right here, this is the fall. So this is from July through September. This is what traded in Bitcoin in 2010. Right, that's the behavior we saw. Then we fast forward in time, and we see this is what happened in 2011. So this is June through September. We had a pretty flattish market, and then that expanded. And then we go into the next season. By the way, take a look at this pattern and this pattern as we move forward here. All right, so we're going into the summer and the fall. We see a market that has risen, gained value, continues. Fast forward in time. Here we are in the summer. We get into the fall, the late fall, we see that expansion. Here's that pattern again.
Yep.
This is the GDAX. Oh, motherfrackers. Oh my God. I wanted to leave after that. But this was GDAX. Or Mt. Gox rather. Sorry. And then we have the summertime. The fall was where we had the major moves. And then we transition out of that, we get into 2015. Here's the summer, followed by fall expansion. Look at that pattern. Fast forward in time again, we're into 2016. Here's that pattern again. Flattened out market after all that distribution, rising in value. We get to 2017. Here's this pattern. We really don't need to know what happened there. Yeah, and then we fast forward to here. Actually, we're in 2018. Here it is. This pattern shows up all the time. And when people say, okay, this can't go to 60,000. This can't go to 100,000. Oh, my God. I was thinking all the way back in 2015, like this can't go to 1,000 again. Oh, every time you start to say this market can't go higher, it rises exponentially. And when does it rise? It rises post-fall, early winter. That is the bullish expansion phase for cryptocurrencies in general, or for Bitcoin. And that is the season we're in right now. It is very normal to see prices consolidate and constrict from late summer into the fall until you get into the winter. That's where you see the moves. And the moves happen over a fast period of time.
So, John, do you think moon soon?
I definitely think moon soon, and I'll tell you why. Because I'm going to use my screen again. There's a cycle. All right, now I put up an idea on this on TradingView back on September 19th, just to say, because I want to make sure I'm not talking out of my ass. This is September 14th, rather. Time of troubles. This was talking about October 18th or October 5th. There is a thing called the Venus retrograde cycle. I know you may think that's weird, but it is an actual thing. And if we look at the S&P 500, this is the S&P 500. These highlighted columns. This is not Madam Cleo. Give me your fortune. You're going to be a millionaire, and you're going to get that Sagittarius to fall in love with you because you're a Libra thing. This is astronomy. Okay, this is just science. These are fixed cycles, not human cycles. This is the Venus retrograde cycle. And I took a short in the NQ on the 2nd of October based solely on this cycle, because when U.S. equities are trading at or near important all-time highs or in your year highs, when a Venus retrograde cycle shows up, it almost always trades lower. Okay, this is the current Venus retrograde cycle that we're in. This is the one that was prior. This is the one that was prior. This is the one that was prior. Whenever the U.S. stock market is trading at or near all-time highs or important inter-year swing highs, the Venus retrograde cycle, for whatever reason, I'm not saying it's the cause, but for whatever reason, shit seems to go down. Pardon my French. And the inverse happens if you're in a strong, like, quick bear move and you hit a Venus retrograde cycle, the U.S. equities go up. Bitcoin, whenever it's had a Venus retrograde cycle, it has these behaviors. If we go all the way back to 2010, flat to expansive. This is after the cycle. So when you look at retrograde cycles in technical analysis, you're looking for what happens prior to this cycle, what happens during it, what happens after. What happens after a Venus retrograde cycle in cryptocurrencies, with the exception of the Mt. Gox year, is that markets rise considerably. Okay. They rise considerably after that. And when does this cycle end? This ends on November 16th. That is also when we should see, midway through the cycle, we should already see the stock market recover shortly before this or after. And the same with Bitcoin. We should see it expand any day now. I've been saying that for 2 weeks.
I was going to say.
By the way, we just came off of the lowest, depending on the exchange you look at. This last week that we had was the lowest volume traded for some exchanges in the past 2 years.
Yeah.
That is a sign of something that's about to blow up, not go down.
For the uninitiated, what does a retrograde mean?
The best way I can explain it is it's a planet that looks like it's standing still in the sky, because it's just here it is. Here's our solar system, and again, this is a part of technical analysis. This is not like voodoo stuff. This is actual legitimate part of financial analysis. They call it the third. You have fundamentals that tell you why something happened. Then you have technical analysis that tells you when and why something happens, and then financial astronomy or astrology tells you when something may happen. And so this is our solar system, and here's Earth. And a retrograde cycle is when a planet and the Earth are both orbiting around the sun almost at the same pace. So it looks like it's either moving backwards or it's standing still. That's all it is.
It's the best way I can describe this is if you've ever watched a video with a car wheel that peels out, and then at a certain point it looks like the wheel's going backwards, but it really isn't.
Yeah, or if you're ever like in the parking lot and you're on your phone and then you're ready, you think you're ready to leave, and then somebody actually backs up before you, you're like, oh my God, I'm going to hit somebody, but it wasn't actually you moving.
Oh, right, yeah, that trick it plays on you.
Yeah, it's like, oh my God.
It's
like, I'm not moving. That's a retrograde cycle. And some planets in some markets, their retrograde cycles are relevant and some are not. But for cryptocurrencies and U.S. equities, the Venus retrograde cycle seems to have a high probability of being involved in some type of major move. But I want to stress that the Venus retrograde cycle itself is no single technical piece of technical analysis is enough for you to take a trade. You need 3 to 4 pieces of unrelated technical analysis to give you a valid bias on any trade, and financial astrology and astronomy is just one of those 4.
Right. At the end of the day, I think we're just a little bit more evolved chimps. So we try to find patterns. In everything we do. I mean, that's pretty much how we're evolved to look at things. Is that, hey, this snake is red, yellow, and black. I'm not going to touch it. This thing is black and yellow. It's going to hurt me. And then, so we try to find patterns as much as we can. And when enough patterns line up, it is statistically significant to actually listen to these patterns, because, hey, lightning bugs, you don't need a lightning bug because you'll die. That's pretty much what a bird does. Right. So these patterns actually, even though we're talking about astrology, astronomy, I think this could be a pretty big relevance in our market.
Right. And again, I know some of this stuff seems kind of weird. It's not something you're going to find on like babypips.com, but it is a actual part of. If you, I brought this book here just in case. I always buy the new versions every year, but if you're ever interested in getting into technical analysis as like a profession, there's the Brits, the Aussies, and the U.S. There's an organization in the U.S. called the CMT, that's the Chartered Market Technicians. So if you want to go full out, full bore market nerd, that is what you want to go into, and you'll
Wait,
learn
how
all this.
thick was that book?
This is the level one. This is the level one. But the level one, if you've been doing,
I'm gonna need some Spark Notes for that because that's.
But you'll learn all sorts of cool stuff like the RSI. Everybody uses. Folks, the RSI, that's Windows 3.0. The composite index is Windows 10. The RSI is used all the time by people. There's nothing wrong with it. It's just that there's a better version of the RSI that came out in the 80s. It's just everybody's still using the RSI. But if you really want to get into technical analysis and go beyond moving averages and Bollinger Bands and dynamic support and resistances just off of past support and resistance that you put lines. There's stuff out there, and you can make a lot of money from what you learn doing it. It's good stuff.
Nice.
I'm sorry.
I was asked this to every guest: do you believe in a traditional market day for the cryptocurrency markets? Like, do you believe in a 24-hour cycle? We don't have the opening bell and closing bell like we do for NASDAQ. So do you believe in a 24-hour cycle for the cryptocurrency markets?
I think a lot of people who trade for over the years will tell you that if it doesn't matter. A chart is a chart, and really the only thing that's going to vary between a 24-hour market that never closes and something maybe between the regular stock market and Forex is that you'll have gaps on the open, or on the you'll see gaps, but otherwise all markets pretty much follow the same rules. Do they have some deviations in their moves? And they all follow the same rules, I should say. There's nothing different from one market to the other. I could put up a yearly chart of the Dow, and then a yearly chart of the Aussie yen, and put nothing on the chart, and you would not be able to tell the difference between one of the. Maybe if you trade those markets, you could, but otherwise, nobody else would be able to.
Good point.
All right. Well,
there is. You should, maybe having markets closed for a day would be good. So everybody can spend time with their family. Yeah. Worry what everybody else is doing.
Apparently I got bags under my eyes. Cyber Kenobi says I need to catch up on my sleep. We are coming down to the end of it, though, guys. We are coming up on the hour here, so I think we pretty much covered all the stuff. Real quick, John, this one's for you because I think everybody knows our opinions on this stuff. Decentralized versus centralized exchanges. What's your preference?
Well, totally decentralized from an idealistic standpoint. From a making money standpoint, in the short term, they have to be somewhat centralized, unfortunately.
I can't wait until I can actually set a limit order on a decentralized exchange. That'll be great.
Oh my God, that can be great.
If I could set a limit order,
yeah.
I would even like
here's
my
the
ledger
fear.
plugged in or whatever.
Mm-hmm.
Here's the scary thing about decentralized exchanges is that, okay, you're going to build it on top of something like Ethereum, and then Ethereum, is going through all these forks and hard forks, and then, we have CryptoKitties, and I like to always highlight CryptoKitties because it shows how vulnerable things actually are. So CryptoKitties could literally shut down an exchange. It'll shut down IDEX, it'll shut down Bancor, just because everything is being traded. Everything that's being traded there is either 721 or ERC20, right?
Thank you for bringing that up, because that scalability, if your platform and infrastructure can be, like you're saying, ruined by some virtual cats that are being sold like breeding cattle to other people, that's an issue. that does not. Oh God, that's weird.
Yeah,
At least it's a functional product. I hate CryptoKitties, but at least it works. That's at least it works. Like we need to see some more stuff that works start happening besides working for, just turning crypto into other crypto. I want to see some of these products start to work.
Shows how early we really are.
Yeah, exactly. So
That OX is kind of cool like that. The tokenizing virtual cards like Magic the Gathering and all that kind of stuff. That's a cool idea.
There's a number of that's all we've been seeing. Like we went to so many different conferences in the last few weeks, and it's just everything about securitized assets, tokenizing other assets, like tokenizing real estate, I think it's not going to be long before we're going to see the ability to buy fractional portions of real estate, fractional portions of like Mickey Mantle's rookie card, whatever. I mean, it's whatever it's going to be. I think it's only a matter of time before we see that. How long it'll be before it's like widespread, adopted, and normal, I don't know. But having the option there, I think, is a step in the right direction.
Mm-hmm.
Yeah, definitely.
Definitely.
There's quite a few projects doing that, and we'll see some decent ones next year, but definitely not mass adoption. Not for a while.
Yeah. That'll take a little while for sure. Yep.
Got a ways to go.
Yeah.
All right. Well, we're coming up on we just hit the hour mark here, so I guess we'll go ahead and wrap it up. But any other closing thoughts from anybody else before we close this thing out?
Yeah.
What about the correlation between Forex news trading and crypto news trading?
Yeah.
Think it's viable?
Yeah, obviously crypto Twitter controls the price of, or at least affects the price of many projects. Do you feel that it's like that with Forex at all?
Forex is heavily news driven. Like Forex, about all the economic news that comes out like every week. Like you'll have a preliminary non-farm payroll reports. You'll have like the Bank of England stuff. There's Google Forex calendar, and you'll know every single important piece of economic news that's going to release, and they rate it, in color coding from yellow to nothing, and then red to, oh my God, do not be active in this market if you don't want to go broke. And there's stuff moves, but ultimately you can move up 100 to or 200 pips, but things resolve very quickly and come back to a mean. Forex is, we're gonna have to wait to see what happens with cryptos to get a more, substantial answer that's accurate as far as how much news is going to affect cryptos. But Forex, we already know how that works. It moves and then it goes back to where it was.
So we got Mohammed wants to know top 5 cryptos lightning round and go.
OX, the Coinbase 5, Basic Attention Token, ADA, ZRX, ZEC for whatever reason, and what's the other one I'm missing?
ETH Classic?
Not Ethereum, XLM, Stellar Lumens.
Oh, yeah, Stellar.
So
I think
the Bitcoin crypto, Coinbase 5, I call them. Those
are the big speculators right now. So.
Yep.
By the way, while we're talking about BAT, first of all, I'm working on a review video, full walkthrough of it, but I just want to let anybody who doesn't know this know that if you haven't downloaded Brave, they give you 25 BAT to download Brave for free, just for downloading it. So you should go download it because it works. So, anyway, just wanted to throw that in there because as I was going through my walkthrough video, I found that out and was like, hey, this is something that I should tell people about.
Nice. I'll have to check it out.
Yeah.
I use Brave. I love Brave.
Yeah, it's a nice browser. I mean, it's basically just a Chrome alternative.
Yeah, it's Chrome.
It's fantastic. I like it. I really like it.
Yeah, it has ad blockers and a few things built in. Yeah, it's pretty good.
Yeah. I can't wait until they roll out the ability to earn Brave for being willing to let you advertise to me. That's like the coolest feature about it. So
that is the best, isn't it? Yeah. Oh my God, I want to get in that beta so bad.
Yeah.
I'll watch your ad for a movie I want to go see anyways. Sure.
Exactly. Muhammad wants to know
BAT's still ERC20, right?
It is, yeah.
BAT's still ERC20?
It is.
The one thing that I really want to see, I hope DEXs could really solve this as well, is that I want an integrated wallet, and that's something that I'm personally working on as well. I want an integrated wallet where I don't have to have Ethereum to send an ERC20 token, where a little bit of my ERC20 token gets sent to an exchange, converted into gas, Ethereum gas, and then is sent seamlessly. Because if you're going to try to explain to a novice, hey, you got to have a little Ethereum to do anything on the blockchain, any token that you want to send or use a dApp, you have to use Ethereum. That's just mind-boggling. That's not ease of use. That's why I still think that Mac has a big market share in the computers I mean, in the personal computer industry, right?
Plug
Where
and play, easy
it's
peasy.
just all about ease of use, right?
Yeah.
Agreed.
Yeah, it's a good idea. Definitely need that kind of thing for adoption.
Patent.
Yep.
No, I'm just
So
kidding. It's
Muhammad
not
wants to
patented.
know
I
my
tried
top
to,
five.
but
I'm just going to throw it out there that I'm doing a video on that this week, so I'm not going to say.
Nice.
Anybody else? Top five? Want to throw it in there before we wrap this thing up?
Mine changes every week, so.
I know, right? That's just it. That's just it.
So true.
That's just it. Exactly.
yeah.
Yeah.
Cool. All right. Well, hey, John, thanks so much for coming on, man. This has been fun. Always good to get other opinions on here. And yeah, I appreciate it. So looking forward to future collabs. And anybody from Forex Lens Decrypto that's been watching this, just so you guys know, we do this show. We stream every day, but we do this show, particularly the panel show, every Monday at 6 p.m. So we always have a guest on, or we try to always have a guest on. And so if you enjoy this kind of content, first of all, smash that thumbs up and give us a share, give us a like and a retweet and all that kind of good stuff. And just set your reminders and be back here next week.
Yeah, and join our free Discord channel. We'll leave it pinned to a comment. It's absolutely free, and if you like it a lot, you could join the Advantage. But if you don't like it, well, you could just
still hang out
come on their Discord and just yell at me. Yeah.
And it's right down the link is right down below in the comments, guys. So if you just put into the description, it's all there. And yeah, with that, where can they find you guys? Decrypto, is it .com?
Forexlens.com and Decrypto, we're on YouTube every day at 1 p.m. And then the recordings are uploaded later too. So
Sweet.
Nice.
Right on, man. Well, hey,
Right.
Thanks again for coming by.
Yep, thank you guys
shout
for
out to
having me. It was a lot of
everybody
fun.
watching, And this is how we are going to drive adoption. This is how we are going to try to get the good content out, is making sure to network with the good ones. So thanks for making time, John.
Yep, thank you for having me. It was a lot of fun.
Right on.
Great. Thanks.
All right, guys. Well, this has been a pleasure, and you know what we say: keep your stop losses tight. I'll see you tomorrow.
All right.
Sure.
You mean no stop losses?
Yeah.